Ladies and gentlemen, the digital currencies in Pakistan, there's not much clarity on how this whole piece has to fit into our overall scheme of things. And we are trying to today figure out how that uh, story will fit in. And this is something we cannot ignore. This is the future. This is the currency evolution. This is inclusion. This is resilience and institutional reform, which are all required to be done for the future preparation. Uh, Pakistan, as you know, is on the digital crossroads, and innovation, inclusion, and monetary sovereignty with central bank digital currency and private stable coins is something which we need to debate and sort out. For Pakistan, the question is not about the technological feasibility, it's the institutional readiness to adopt for digital currencies. And therefore, to me, and I'm big on this and I talk about it all the time, is all about empowerment of citizens without undermining our existing currency, which is Pak rupees. And this is what the ultimate objective of digital currency is. Just for you all to as a takeaway, please go and get your hands onto this book called Sovereign Individual. Very revealing book, and that will give you a good idea on how important this private currencies would be in going into the future. This book was published in 1995, and now it's in 2025. There are lots of things which have actually come true, what they had talked about earlier. Rather than putting your head under the sand and saying, we don't have to deal with anything, frankly speaking, let's bring things forward. Let's talk about it, and let's learn from each other. Let me just put a disclaimer right at the outset. Dr. Slurry has been very kind to say that I'm a sort of an expert on this. I'm not an expert at all. I am learning from my colleagues. Let me just give you an executive overview of the digital currency here. Right now, Pakistan's policy posture is need to be done more in terms of making it more coherent. I would not go to the extent of saying it's fragmented, but I think a better alignment is necessary. And the Virtual Assets Ordinance 2025 introduces a regulatory foundation already. You heard the finance minister talking about the crypto council. There are 100 million adults, unbanked, 60% of that adult population, and most of them are younger people. Unless we prepare ourselves to go to these people, we will miss out on this big opportunity into the future. However, there's a policy tension, and let's not take it in a negative stride. Policy tension is something which is actually very obvious in such situations where things are emerging and they're unclear and they're coming to forth. So there is absolutely no negativity here. It's just that policy tension has to be there, and then when we talk about it and arrive at some kind of conclusion on what needs to be done, I think that policy tension will be taken care of. On one hand, it's the innovation, inclusion and remittances and lower cost of financial flows, where the regulations are generally not perceived to be very supportive. But on the other hand, financial stability, monetary sovereignty, AML CFT and capital flight are the real issues, and we need to make sure that the regulatory environment is balanced enough to support both the sides of the coin, and we won't miss out on either one of them. And there's a big opportunity of window here. When we talk about crypto, people say that if we could unlock something like $20 to $25 billion, and the dormant resident held digital assets in regulated economy, balance must be done. The strategic choice, however, is either to regulate and integrate, or risk of losing control and innovation and capital flight offshore. It's basically coherent phased digital currency strategy, Pakistan's fragmented crypto reality, engine for inclusion, transparency in capital formation, and this opportunity cost of inaction is steep. Regulatory silence, effectively exports innovation and liquidity offshore, and we need to avoid that situation in all respects. Let me just start out with the global context and trends. To understand Pakistan's situation, it's very important to first appreciate where the global digital currency status stands. Let me just start out with first talking about central bank digital currencies, which we all call it as CBDC. CBDC is expected to increase utilization of it 2 times between now and 2030. Currently, it's somewhere around $100 million, and 92% of these flows are actually domestic in nature. And to my mind, CBDC is essentially driven towards this objective only, and we talk about it in detail a little later. Secondly, the stable coins, which are privately issued tokens, are pegged to traditional assets, and of course, the most favorite one is US dollar. Currently, it stands at $27.6 trillion and is expected to increase even further going into the future. But with the largest one of this 27.6 is actually $100 billion in US Treasury backing. Let me just share with you that this has not come through in vacuum. There is a reason behind it, and when you read the book, Sovereign Individual, you'll be able to appreciate what's going on. The biggest threat to, ladies and gentlemen, I'm making a big statement here. The threat to US dollar today, the sovereignty and the superpower aspect of United States of America, is not from any other currency but the cryptos. Therefore, the step towards stable coins and a step towards Genius Act, and that seems to be working as well. And I think it's a very, very smart move on the part of the US. For the time being, the pattern emerging is no longer simply banning cryptos. It's actually co-opting digital innovation. The case in point is China's e-currency and India's pilot corridor. The point here is that Pakistan's strategic imperative is to shape rules before they shape us. We cannot escape this reality, and we need to be prepared for it. Let's take things in our control rather than they driving us of what needs to be done in the future, which we may or may not like. For the digital currency, it varies from the different sorts of currencies, varies from different risks. The terminology is loosely, but some has loose risk and controls. The others require more regulatory imperatives, and it depends on the design that you would like to follow for that currency. For example, in case of cryptocurrencies, it's a decentralized tokens. Example is Bitcoin. There is no central authority. It's actually done by the individual, and you have to trust that individual to understand whether you are willing to take that risk on that currency or not. It has to be value determined by market dynamics. It's purely market forces driven. The risk profile is highly volatile, and typical use case, by the way, is speculative and investment in nature. The second constituency to my mind is stable coin. It's again privately issued, but nevertheless is backed by a fiat. Most popular one obviously is US dollar, but then we have yuan as well. I think Pakistan is seriously considering about rupees stable coins too. The value basis is reserve management and regulatory, and it is a regulatory product. And the ideal use case, for example, are payments, remittances, and decentralized finance rails. CBDC is issued by the central bank. It's a sovereign fiat. It is a national currency, of course, with lower risk, used for domestic payments essentially, and promoting inclusion. To my mind, essentially it's the same currency when you talk about CBDC. It's only a shift, and I'm putting it in a very layman term. It's a shift from printed currency in coins or paper to in a digital form. Pakistan's railroad exists, Rast is there, RTGS is there. The foundation potential for CBDC underlying are very much existent. However, the clarity on the financial inclusion and offshore piece is something we need to understand and appreciate. If I were to, in a very crude manner, define the two, CBDC is essentially moving away from the printed currency to a digital currency. Railroads exist. CBDC is the the digital currency that we talk about. There is no new currency which has been created. It is the existing underlying fiat which is being used, whether it's CBDC or it's a printed cash. On the other hand, crypto, the primary difference between crypto and the first three stacks that are in front of you in the slide is actually that the crypto will be an alternate currency being printed by the individual and issued by the individual. And this is what is the real differences. Printed cash, the baseline store of value. Fully physical, informal transactions are promoted by virtue of which and vulnerable to theft and counterfeiting. Cross-border, almost unusable. The second one is the digital banking and Rast. There is no currency being made here. It's merely an overlay, as I said. It's just a railroad which is supporting. SBP issued money is used for transportation here, merely for domestic digitization. CBDC, as I said, it's basically a shift from printed to the digital side. Clear cut case of financial inclusion. जो हमारी ग्रे इकोनॉमी है वो इतना बड़ा साइज है, जो करेंसी इन सर्कुलेशन इतना बड़ा साइज है, जो डॉक्टर साजिद का तो मेन सब्जेक्ट है. हाउ विल दिस हेल्प इन curtailing it? The stable coins are the regulated one, and they're essentially required to attract the younger population and promoting the international remittances. The main message in this slide serves a different purpose altogether. All of them serves a different purpose altogether. Cash drives informal economy, digital banking, domestic payments, and cross-border speed and liquidity through stable coins. And therefore, we have to look at it, all of them in the same as complementing each other and not competing each other. Now, frankly, I could have elaborated it in detail. All I would like to say is that Pakistan has huge, currency in circulation, 27% of the broad money, and that fuels, informal economy and everything. The result is that, although there is a dramatic shift towards digitalization, 88% of the retail transactions are now digitally done, but that's in the banking system. Most of the transactions are outside the banking system. And the mobile wallets and the QR transaction and the consistent double-digit growth is being witnessed. Cashless Pakistan initiative is something which will boost this whole effort, which is headed up by none other than the Prime Minister himself. I'm also happen to be part of that initiative, and we are most excited about it. That will help us in developing the necessary infrastructure. Logical next step for digitizing the currency itself. Inward remittances ka channel, weakening our own currency, the stability, financial stability piece, and I personally believe that the cryptos continue to be of restrictive use, and we should not allow them to be used openly. The name of the game is stable coins. Cyber security and operational risk, Dr. Saab, you've already talked about it. I won't get into the detail. Consumer protection is the key, which is driving from all of them, and legal and financial coherence is something which is must when we talk about going into the digital currencies in future. The principle is simple: move fast, but under control. Financial sovereignty depends on it, really. The role of financial institutions, I again very briefly talk about it. On the opportunity side, the banks can be custody and settlement operators. CBDC will act as a catalyst for our already digital offerings. Wholesale tokenization will be a big opportunity, especially in FX and trade side. and embedded finance infrastructure will help in promoting financial inclusion. On the constraint side, obviously, the regulatory ambiguity is there, licensing bottlenecks need to be taken care of, and supervisory risk perception. You see, ladies and gentlemen, it's the larger issue, Dr. Saab, is about the perception and the negative perception attached to it. We need to move away from that negative perception and unpeel what the real risks are and then determine what needs to be done. But to my mind, all of this is a part of the process of evolution. We are getting there, coming along very fast, and we will get to that ultimate destination even faster, inshallah. Going into the future, our recommendation, the Crypto Council is already in existence. It needs to be made perhaps more broad-based, more representation is necessary, Dr. Saab, there. Digital currency roadmap is necessary from 2026 to 2030. Two visibility, high visibility pilots are required, one for inward remittances, the other one for wholesale tokenization. Independent academic evaluation. Somebody like yourself, Dr. Saab, SDPI has to volunteer this, please, that, let's pick up 2 use cases and then you do the assessment of it, and leveraging our development partners. Binance is already very active in Pakistan. We need to have TA from UNDP and ADB to then take it forward. At the end of the day, it's only one of these ensures sovereign, sovereignty and balance between the future opportunity. It is not an either or situation to my mind. Let me just very briefly tell you. We have to pursue both. We have to pursue CBDC, Dr. Saab, because it has a domestic appeal and financial inclusion piece. We also do not lose the sight on the ball on the crypto, but on the crypto, perhaps we should start out with stablecoin, and let's see how things will pan out. The stablecoin is a safer proposition to pursue, but both of them have to go in tandem, not one against the other. They are part and parcel of the same ecosystem, same digital requirement going into the future, Dr. Saab. Thank you very much for all your patience.